My name is Audra Hennigan. I'm a CPA, tax consultant, and university instructor. My goal is to break accounting concepts down into short, concise discussions, making learning easier and more effective. This lesson is part 1 in a multi-series on basic accounting concepts. Let's start by understanding the holy grail of accounting, the accounting equation. The accounting equation provides a holistic view of a company's financial state. It is the backbone to the creation of financial statements and the rationale for why accounting is the way it is. The key is all accounting journal entries ensure the equation stays in balance. Actually, the concept of balance is used often in the accounting world. Not only does the accounting equation we will discuss here have to balance, there is a balance sheet, and the amount of any debits and credits recorded must always equal in their amounts. We'll discuss this more in the next episode. This balance ensures that every transaction completed by a business is recorded and reflected appropriately in the financials. Understanding the pluses and minuses of debits and credits may seem like another language, but my hope is that this video provides the theory behind how everything balances out, so you can better apply debits and credits, whether you need to pass an accounting class or you're just trying to record your own business transactions. The accounting equation is assets equal liabilities plus equity. Or better said using basic algebra, assets minus liabilities equal the net equity of a business. Every business ideally has more assets than liabilities, ensuring that the business is in good health and financial standing. The use of debits and credits ensures that any transaction posted has two sides, and once both sides are recorded, the formula assets equal liability plus equity continues to remain true. There's no rule that a transaction must impact both sides of the equation. In fact, some transactions may be an increase and decrease to the same side. Let's look at a simple example to better illustrate how transactions impact the accounting equation. A company purchases a new car for $15,000 in cash. A car is an asset and cash is an asset. The company utilizes cash, thus decreasing the assets by $15,000, and also acquiring an asset, a car, valued at $15,000. The left side of the equation increases and decreases by the same amount. Now let's assume the company purchases the same car on account, in other words, for a loan. In this instance, the company increases assets for the value of the car by $15,000, same as in our prior example, but it is also liable to pay off a loan in the future. The company increases their liabilities by $15,000, and both the left and the right side of the accounting equation increases. Finally, let's look at an example whereby a company is earning money. If a company sells a pair of shoes for $178, then it will receive cash, an asset, and will also earn income. Income and expenses are recorded in the equity section of the accounting equation. The selling of shoes increases cash, an asset, and the recognition of revenue increases equity, so that both the right and left side of our accounting equation increases by $178. In other words, if you think about how a business transaction impacts a company, you can then determine how to record it. If a company is spending money, like paying rent or taxes, it is recording a cost and either using its assets to make those payments, or it's going to record a liability to account for the payment at some future date. On the other hand, if a company is making money by selling goods or providing services, it's recording revenue and increasing its assets. One other item to note with the accounting equation is that if you only know two parts of the equation, you can solve for the third. Let's assume a company has assets of $1,500 and liabilities of $860. We can determine the equity of the company by solving for the missing component using basic algebra. If I move the liabilities to the left side of my accounting formula by subtracting, I get $1,500 of assets less $860 of liabilities, which equals $640 of equity. Knowing that the accounting equation must always be in balance helps guide us in making proper journal entries. In episode 2, I'll provide you with several ways to conceptualize how debits and credits are used to increase and decrease assets, liabilities, and equity. If you like this episode, please consider subscribing to my channel. And if you have any suggestions for other accounting concepts you would like made easy, please feel free to leave a comment in the box below.